What's going on? Welcome back to Trending Stocks. Today when I talk to you about SoFi, I want to go over some of the current data points, break it down on what is really moving it, and go over everything else you need to know. But first, make sure you guys hit that thumbs up, and with that, let's get right to it. So SoFi is green. Market is in bloodbath mode. You do see this is basically like the worst day. I think this article even says worst day in 2024. A lot of different various things all affecting it, even looking at the major indexes. So NASDAQ is down 2.51%, S&P down 1.21%. But guess what? SoFi just says, F that, I'm going to be green. I'm very surprised. Even pre-market when I did my video, it looked as though it was going to test at 750 mark. The low for today, 757, high of 791. So there is definitely a good amount of FOMO kicking in. At the same time, you do see a good amount of institutions buying into SoFi. So these are some of the transactions occurring so far on the secondary market above $100,000. So 5.01 and then 2.06. As I did signal in my video yesterday, I do feel that there is a broad rotation happening into equities as people from money markets is going to be moving over. I think it's just very, very bad timing based on just the tech rotation and just the sell-off associated to semis today. But when I did bring this up yesterday, my apologies, I think I accidentally did show you the volume summary, but looking at the actual dollar value, you see even right now it is up about 18.69% just today, and this is on the NASDAQ. New York Stock Exchange is up 15.89%, and then CBOE is up 12.74% from the last 5 days. So big money is starting to get into the market. I know it doesn't really look like that, but it kind of goes to show that if this injection of capital wasn't happening, imagine how bad the sell-off truly would be on a larger scale. Again, that's not really affecting SoFi, and what is happening in the broader market right now is not affecting the potential for a rate cut in September. So that is definitely a very good thing. So still a 93.5% likelihood of a 25 basis point cut for September, and hasn't even changed the November one. So if anything, it's improved. I think last time I brought up it was at 54. So now it is a 60.7% likelihood of another 25 basis point cut for November 7th. And so based on Anthony's last interview, he said that they are forecasting 2 rate cuts in 2024. And so yeah, lo and behold, I think that might actually come to fruition and really help SoFi's bottom line. As of today though, there's been no actual news associated to SoFi, no SEC filing. So it's just been kind of piggybacking off of the broader market, but yet it does have kind of an aspect of FOMO kicking in. You have shorts not really doing all that much. In a lot of other growth stocks, shorts are doubling the hell down. Today, they're increasing 324,000 shares. So they have been very, very timid, which obviously given SoFi being up as much as it has been over this last, let's say looking at the last 5 days, up 12.45%. and up 21.69% or 21.96, sorry, over the last 1 month. Like, you'd figure that sooner rather than later, shorts will be starting to return some of their shares. So that is, again, something to keep in mind. SoFi, for shorting purposes, is considered somewhat of a risky stock. So you do need a lot of margin. So whoever is shorting SoFi, as I brought up, clearly has deep pockets. But I'm pretty sure we already generally know who is shorting SoFi, a lot of the big market makers, so they do have a lot of big pockets. It is back to being negative, so cost to borrow minimum is negative 0.2%, so it's back at this manipulation, just trying to drum up some shorting for SoFi. Very sketchy stuff, but 17.47% of the free floats being shorted works out to be 181.4 million shares overall are being shorted. Utilization is 63.33, and then short score, so the higher the number, the higher the likelihood of a squeeze happening, is 73.75%. Moving over to options. So right now, $15 million in calls, 5.26 million in puts. So a massive amount of volume has been getting into SoFi through options. And just to give you an overview, I don't think I did bring this up, but 57.9 million shares have been traded today. 34.8 is the average. So even common stock as well as options is getting a lot of volume. 43% of all the options being done so far today are optimistic and bullish, and more so anticipating for it to be in excess of now $9. So FOMO to the next level. And as I brought up, one thing that you really need to watch on what is kind of just shorts hedging, they always hedge with the closest strike price. So a lot of this activity around the $8 strike price probably is just shorts hedging. A lot of this right here, so at the 8.50 and 9, that is simply optimism. And so this is how you can kind of distinguish between all of that. Looking at the open interest, so not just counting today's volume, but the open interest. Right now, there is 35,000 at that $7 strike price, 29,000 at 7.50, 95,000 at 8, and then you can kind of see the rest. So in essence, if SoFi is able to close above $8 by this Friday, you are going to see a gamma squeeze. And that might be that dagger that shorts can really go fuck themselves with, and pardon my French, that would really prompt shorts to return some shares. Because right now, given if it can continue the status quo, market makers are going to have to cover at least this. So arguably around 65,000 in open interest. So that does mean about 6.5 million shares. If this 95,000 is in the money, that is 9.5 million shares. So imagine all of that having to be covered by market makers. That in reality is the pure definition of a gamma squeeze. So SoFi might actually be doing a hell of a lot more than just plus $8, because like I said, in the short term, based on the technicals, I do see in excess of $8. That's not counting a broad market kind of push or going into equities. That would really propel SoFi higher. And I guess I forgot to really bring it up in my video yesterday. That rotation isn't going to come just one period, right? That was, especially looking back over 2020 to 2021, that was over roughly about a year. So it's not going to happen overnight. It's going to be slow and steady, but nonetheless, as I brought up, it will really propel SoFi and many, many other growth stocks significantly higher. So again, just to give you an overview of that, right now looking here with it at $7.89, it is trading between this R2 and this R3. So $7.97 is going to be that next strong resistance / target, and then 7.50 is going to be that strong support. Again, this morning I did anticipate for this to be touched because it did have a low of 748 pre-market, but lowest it came was 757. So FOMO is really in full force for SoFi, and I think rightfully so. Looking on the actual chart itself, so higher percentile of the Bollinger Band, actually in fact it's outside of that, but it is above both the 50 and 100-day moving averages. Stochastic, you do see a nice bullish deviation, so white line above the red. But as I've indicated, first sign of weakness specific to SoFi, you could see a pullback, so just kind of anticipate that. But number of retail investors are getting in. So another day that you see institutions and retail buying at the exact same time. So honestly, SoFi is a very interesting stock, and lucky to those individuals that did buy around that 650. I guess the age-old saying about buying when there's a lot of blood in the market is a very good, accurate representation of SoFi. So let me know your thoughts on SoFi. Give yourself a shout out. Have you been buying? Have you been selling? What have you been doing with SoFi? And where do you think SoFi is going to be post earnings? I might do a poll on Twitter or possibly even on YouTube, just asking where people think it is going to be post earnings. Kind of interested to see people's viewpoint on that, if they think that there's going to be more of a corresponding pullback as what typically has happened, or if this run is going to continue. Because I did do a video previously on how this run right here that we're kind of going through is different from the in the past, right? You are actually seeing a good level of institutions truly buying this time, and plus a lot of this optimism is fueled by rate cuts. So it's kind of, this time is different. This time might actually continue to run up, but we'll just have to wait and see. With that said, I appreciate all of you guys watching. If you do like my channel, want to support the growth, take a look at my memberships, link in the description below and also the comments. With all that said though, appreciate all of you watching.